Yes, hi, good afternoon, everyone, and thanks for joining. So now it's 12:35. We should start the session. Though most of the people have joined, but we are waiting for more people who may join in between. So I will just share my screen with all of you. So see, the theme of the session is, which is being presented by ICICI Pension Fund. The theme of the session is, are we doing something to ensure that we will match our lifestyle when we stop earning? Because in life, one phase will come when we'll stop earning, whether we are having our own business or we are working with any of the company or we are having a government job or anything. At one point of time, everybody will stop earning. That point of time, do we have the financial independence or not? That is what we are going to cover in this session. And there are few life truth that we will cover so that we can realize the importance of saving today, secure our tomorrow, and the different asset classes where we can invest money and save for our retirement. So the one of the important part of our life is that every stage of our life, the definition of success evolves, the requirement changes, and the way we see the life will change. Our aspiration will change. Our, you can say like the kind of responsibilities we will have, those responsibilities will change. So in the era, in the age bracket of 20 to 25, we are more concerned about getting our first job. We are more concerned about taking our first car. We are more concerned about purchasing some luxury things which we always aspire to have. But once we move into the age bracket of 30 to 40, our scenario of looking at life will change. We think about how to build a good house. We think about how to have a good family and how to have a good family life going forward. And maybe we will think about roaming around the globe. So requirement changes in every phase of life. 50 to 60, maybe we will have a responsibility of raising our kids. We have a responsibility of their marriage, their higher education. And maybe that point of time, we start thinking, what happens after 60? Do we are prepared for managing our that phase of life? Or if I'll talk about whether today I am ready for my next phase of life. If I'm in the age of 30 to 40, am I ready today for 50 to 60 or not? And to manage every phase of our life, we always look for investing our savings into different asset classes. So we earn, we enjoy our life, we manage the daily expenses, we save some money for our short term and long term goals which we define for our life. But there are certain things which always bother us. Those are one of the important aspect of the financial planning is rising cost of household spending. It means that inflation. We know that every year things are getting costlier. Whatever we do, 100 rupees today will not be the same 100 rupees 10 years down the line. And that is the reason why we always look for investing money into some asset classes which can at least beat inflation, give us some good returns, and those returns, whatever we earn plus our savings, together we can use for next phase of our life. Maybe people save money for their purchase of house. People save money maybe for their kids' education, higher education, kids' marriage. Different responsibilities could be there. So inflation is the one of the thing which always bother us. And second aspect of that we should always take care of is the rising cost of medical expenses. We all know that as we grow older, we require more medical support. Are we ready for it today or not? That is again one of the important question. And then the last point is the family structures are also changing. 10 years, 20 years before, people were living in a joint family structure where the responsibilities were shared. We know that if one person will face any financial difficulty, others are there to support. But in today's era, people are moving toward nuclear family structure. It means that we are at our own and we have to not only support our family, but we have to support for ourselves also. And we have to ensure that at every phase of our life, we are being financially independent. And that is very, very important. So if you want to ensure that you have the financial freedom at each phase of your life, and you would like to continue the same lifestyle which you have today, the same lifestyle you want to carry tomorrow, day after tomorrow, or maybe when you stop earning. So you have to ensure that you are creating a long-term wealth. Why I'm saying long-term wealth, not a short-term wealth? Because whatever we are saving with a short term, that will be consumed in coming 5 years, maybe next 2 years, next 3 years, next 5 years down the line. Whatever wealth or whatever saving we will have, that will be consumed. But whatever we are saving with a long term, that will stay with us, and that can help us to have some wealth plus steady future income, so that we won't be having any kind of stress on us how to manage same lifestyle once we stop earning. Or another question is, if today I want to stop earning, do I have enough money to manage the same lifestyle? Because the concept of fire is also very predominant in India, where people would like to save very aggressive to be the financial independent, maybe in their 40s, so that if they can take a call, if that point of time they want to stop earning, they can do so, and they have enough fund and they have enough avenues to have steady future income. So that is what we are going to discuss. So normally, as Indian, we normally invest money, like previously we were investing money in fixed deposits and PPF. If somebody is working any establishment or company or government sector employees, they were saving money in terms of PF, maybe in superannuation, maybe they are having some kind of no, buffer in terms of gratuity also. So those were the traditional product where we were investing. Then we are also, as an Indian, we are also investing a lot of money into physical assets. It could be gold, it could be silver, it could be real estates. And those assets are also like giving us a decent amount of returns, but I could not say that those kind of returns are beating our inflation. Not all the time. Then, of course, as on date, many of the people are investing in mutual funds through SIPs. Why they're investing in mutual fund? Because mutual fund sahi hai. And second is like we always say कि mutual fund may we have a lot of liquidity. When we want money, we can withdraw money and money will come to us within 1 or 2 days, and that money can be utilized. It means that we're looking toward a product which is giving us flexibility to withdraw money for our short-term goals or short-term requirement. But the question is, if we invest 10,000 rupees per month and wait for next 20 years, how much corpus we can build up among these assets? And you can see the range is somewhere between 50 lakhs to 92 lakhs. But whether that 92 lakh rupees will be sufficient for manage our lifestyle after 20 years? I feel even today, if somebody will have 1 CR of the corpus, they cannot take retirement. They cannot stop earning. Why? Because 1 CR is even not sufficient to ensure that the same lifestyle which we have today, we can continue in future also. And that too for not next 20 years or 30 years. And why I am saying 30 years, 20 years? Because in India, the medical facilities are improving. The life expectancy rate is improving. Now I can say average Indian life could be up to the age of maybe 80 years, or could be more than 80 years also, depending upon the person to person. But yes, it is on a rising phase. And when we stop earning, we have another 20, 30 years to manage our retirement, right? So are we ready for that phase of life? And do we have any kind of product which can help us to manage that particular phase? So NPS is one of the product which is launched by Government of India in 2004. Initially, it was introduced for the Government of India employees, not for anybody, not for citizen of India. But that time government realized that in India, we do not have any product which gives social security to our citizens. And today, you know that many of the old aged people are dependent upon government subsidies, or maybe they are dependent upon the kind of money government is giving. And you know that money is in the range of 2,000 rupees, 3,000 rupees, or 4,000 or 5,000 rupees maximum. But that 5,000 rupees, do you think it is sufficient? And people can manage the same lifestyle in that money? The answer is completely no. And today, India is a young country. We have a lot of young people population, but tomorrow we are going to be a country with a lot of old age people. Maybe after 30 years, maybe after 35 years. So are we ready to face that challenge? So that is why government introduced NPS for citizen of India in 2009. And the idea was people will save money for a single purpose. The purpose was once you stop earning, you have enough money so that you can continue the same lifestyle and study income post retirement, or maybe once you stop earning. That money can be used to give you study income, lifetime fixed income. If as a customer today, I have NPS. I know that once I will retire, I have enough money. That money I will put into the instrument which will give me pension for lifetime. So I will at least have money to manage my basic expenses. I'll never be sort of having challenges to manage my kitchen, manage my normal household things. Why? Because I have that product which is solving me for that particular problem. And government of India has given a lot of benefits while investing in NPS. So like as a customer, what I want? As a customer, I want good returns. If I am just investing money anywhere, NPS gives you market linked returns, and returns are pretty good. Returns are in the long term, returns are in the range of 10 to 15%, depending upon your age. When you are starting investing in NPS and the kind of investment choices you have chosen. Second part is we always look for the cost. Where I'm investing my money, the money wherever I'm investing, that is to mean how much cost I will incur. NPS, the cost is only 30 paisa, 0.30% of your AUM per annum. And government is deciding this cost. And this is the lowest cost product available in the market, 30 paisa. If I'll compare this with other product, maybe we can compare with mutual fund. The average cost in the mutual fund is in the range of 1% to 2.5%. So at one third cost, I can invest money in NPS, get good returns. Plus, the best part is it is pretty tax efficient. Returns on in NPS are tax free. When I will withdraw money, there are certain boundary conditions, but I can withdraw money completely tax free. So you can imagine somebody who is investing for 20 years, investment would be X amount, returns will be 3X. An entire 3X amount will be tax exempted. So for example, if I'll take my case, in next 30 years, I will invest around 50 lakh rupees and my corpus will be around 2 CR. The entire 2 CR will be tax exempted for me. I can make it happen. Why? Because in NPS, government is giving those kind of flexibilities. Plus, if you are working with any of the corporate and that corporate is investing money in NPS from your salary, a part of your salary they can deduct, they can contribute in NPS. In that scenario, you will save taxes also. If you are paying tax, whether you are in new tax regime or old tax regime, but if you will invest NPS through your employer, you will save taxes also. So we can say returns are good, cost is low, tax efficient, and because of power of compounding, a good amount of fund we will have. So that is the power of this product. And how it works is it's a very, very simple product. You can contribute, you have to just open your NPS account. Like ICICI Pension Fund will help, we can help you like to open your NPS account. The NPS account journey is pretty simple. Within 2 minutes, you'll be able to open your NPS account. And once your NPS account is opened, you can contribute yourself every month. Like you can start a SIP of 5,000 rupees, 2,000 rupees, 10,000 rupees, depending upon your financial goal. If you are working with any of the corporate, you can ask your corporate, they can deduct a part of your salary and invest in NPS. That will give you direct tax benefit also. Plus, it will be a regular contribution coming. That will not create any kind of impact for you. And we call it accumulation phase when I am investing money in NPS. And NPS is not only for retirement. I'm again telling you, this is the very good product for wealth creation, which I personally realize or I personally feel. Why? Because in NPS, it is allowed to withdraw up to 80% of the fund. 60% I can withdraw tax free, and rest 20% I can withdraw by paying tax also, depending upon the person to person. So up to 80% money I can withdraw. That will be my wealth which I have created over the period of time. Minimum 20% will give me guaranteed income for life. That money 20%. If I have 1 CR today, I have an option to withdraw 80% or maybe 60% tax free. So as a person, I can withdraw 60% tax free. 40% I can keep that money for giving me income in the form of pension. So maybe 40 lakh rupees I can invest for the pension. And that 40 lakh rupees will give me approximately in today's era, maybe 40,000, 35 to 40,000 pension per month. And that will be guaranteed for lifetime, whatever the economical situation would be, but my income for lifetime will be guaranteed. And the best part is the money which I am keeping for income, future income or pension, that entire money will come back to my kids. Because I can nominate somebody, my kids I can nominate while I am taking pension. And once the demise of the person, that entire money will come back to the kids. It means that no loss of capital, a good wealth creation tool, plus giving a guarantee of income for life once we stop earning. And another good part is you need not to wait for the retirement age or the age of 60. Whenever you open your NPS account, if you complete 15 years in NPS, you have an option. You can close the NPS account, can get your wealth and pension going forward, or retirement age or age of 60, or you can continue till the age of 85. So if somebody at the age of 25 is opening NPS account today, the person will be eligible to withdraw money at the age of 40. It means that a young person today can start a journey of being financially independent at the age of 40 with NPS. Somebody who has not done in the early stage of life, maybe at the age of 45 or maybe 50, if the person would like to take the benefit of NPS, they can also start investing in NPS if they complete 15 years or the retirement age or the 60 years of age, whatever is earlier, they can realize their financial independence. Simple product, single product, Government of India product. We have the trust and we have the security by the Government of India, and very reliable product. So I suggest it should be a must-have product in our portfolio. And NPS is for everybody. In NPS, you can have two different kind of accounts. One, Tier 1 account. Tier 1 is a mandatory retirement account where we have all the tax benefit applicable which Government of India is giving to us. The government also want Indian people should have a lot of financial security for their old age. So that is why they are also giving a lot of tax benefit. So we call it Tier 1 account where you can save money for the long-term benefit. We have a Tier 2 account also where there is no lock-in. Anytime you can invest, anytime you can withdraw. All the functionality and benefit of NPS you can avail, like low cost. But it will be a voluntary account. Anytime you can put money, anytime you can withdraw money, but there will be no tax benefit. So you can say Tier 2 is my low cost investment account where I can have good equity exposure. Tier 1 is my account where I'm investing money for my future to be financially independent after 10 years, 20 years, 15 years down the line. Then we have a different investment choice, and the investment choice are pretty flexible because government understand every person is different. They might have different financial goals. They might have different family structure. They might have different income structure, and they might have different risk appetite. So we have three, four investment choices. One is the active choice. In NPS, we as a person, we can invest in equity. We can invest in corporate bonds. We can invest in government securities also. So three asset classes we have: equity, corporate bond, government securities. And in active choice, we can decide how much money we want to invest in each one. So as a person, I can choose, I want to invest 70% money in equity and rest 13 government securities and corporate bond. So a person can decide how much percentage of money they want to invest in different asset classes. We call it active choice. Means people are active. They know how to invest money in different asset classes. If not, then we have an auto choice. So auto choice is defined by regulator. So in NPS, PFRDA, Pension Fund Regulatory Development Authority, is a regulator of this product. appointed by Government of India. So PFRDA has given a particular chart and an auto choice as per the age and risk appetite. The allocation toward equity will change. So in auto choice, we have aggressive, moderate, and conservative. Aggressive means more exposure toward equity. Conservative means less exposure toward equity. And as per the age of the person, as you grow older, equity exposure will go down. The idea is to do not have much fluctuation once you reach at a certain age. So active choice, auto choice, these are two you can say old choices available in the system where the person can decide. But we have the third choice, which is very new and going forward. This is going to be the future of NPS, multiple scheme frameworks, where the fund manager will decide the allocation of money into three asset classes. See, because as a person, I always feel I am not a best person to decide where the money should be invested. If I have a trusted advisor, if I have a trusted fund manager who can take a call on my behalf, the person who is into the business of managing fund in day-to-day life, then why not to leave the choice into the hand of those capable people who can manage it properly for me? And that is where multiple scheme frameworks comes into picture. So ICICI Pension Fund has introduced two products. One is My Family, My Future, My Family, My Future Plan. So this is for everybody where we have equity exposure up to 85% and 15% will be for government securities, corporate bond, or maybe some liquid cash. And fund manager can decide how much money should be in equity at one point of time. It could be in the range of 50 to 85%. And the best thing is every day they can take a call. They can decide as per the market condition. The second product is Dream, which is again one of the best product, maybe for youngster, where we have equity exposure in the range of 50 to 100%. And ideation of launching this product was because market is fluctuating. Market is never a straight line. It is like zigzag. So depending upon the market condition, whether the market is going up or going down, my fund manager can decide how much equity exposure I should take. And I'm sure these products are going to give the best return in the market going forward. And recently, Government of India introduced NPS Vatsalya. It was launched by Finance Minister last year only. And it is a product for kids. So I just take a minute on it because this is an important discussion. Maybe in our next events, we'll discuss more about NPS Vatsalya. But previously, people were having few choices to invest money for their kids. They were either investing in life insurance policies or maybe Sukanya Smriti Yojana, where they are investing money for their girl's child. So these are two dominating schemes where the people are investing money. Life insurance policies, we might be getting a return of around 5 to 7%. Sukanya Smriti, you know, the returns are defined by government, like 8.5%. But now we have another product which we can give to our children. And the product is NPS Vatsalya. And why I feel this is a good product? Because previously people were investing money for securing the maybe for their kids' education or marriage. But NPS Vatsalya not only take care of these two requirements of future, but in case of emergency, you can withdraw money. It will take care of emergency situation also. Plus, in case of marriage and education of the kids, you can withdraw money. Up to 80% you can withdraw money, right? That we have seen. And the last part is, if my kid will continue this NPS account after 18 years of the age, it could be the one of the good product for wealth creation. I am giving a small kitty of money to my kid. Ki boss, you take this money, continue your journey of financial freedom. And because I have created a base, it will multifold in coming years. A huge fund will be there for the person. And today, maybe we will get our financial freedom maybe at the age of 45 or 50. If we are gifting NPS Vassal to our kids, they may get a financial freedom much earlier. Why? Because we are giving them exposure of financial security at a much earlier age. And in NPS, the best part is we have a lot of flexibility to withdraw our money in case of need. So we have an option called partial withdrawal. Partial withdrawal means whatever I am contributing as a self contribution, 25% of that I can withdraw. That to 4 times during the entire journey of my NPS. I just said I have to wait for initial 3 years. Post that 25% I can withdraw in case of any emergency. And 4 times this particular facility I can use. So it can take care of my emergency situation. Other part is premature exit. Maybe I do not want to wait for 15 years. I want to close my NPS account after 5 years or maybe 2 years or 3 years down the line because I have some other financial goals. I have some other things in my mind, or I want to do something else. Maybe we are not aware of future, right? In future, anything can happen. So premature exit is available where there is no lock-in. Previously, the lock-in was of 5 years. Mandatorily, you have to be in NPS for 5 years. But now, whenever you want, you can close your NPS account. If the fund value is less than 5 lakh rupees, you can withdraw the full amount tax-free. If it is more than 5 lakh rupees, up to 20% you can withdraw the lump sum. 80% will go for the pension. Because ultimately, this is a pension product. But yes, without lock-in, I have an option to close my NPS account anytime, whenever I want. And for mature exit, to reach at a level of financial freedom, to reach at a level of where we can say I am financially independent, now I can take my life at my own pace. I have sufficient money for myself. I have NPS. I'm pretty confident that I have good money and that money can give me steady income if I stop earning today. So mature exit, previously the mature exit was allowed at the age of 60 years or at the time of retirement. But now it is available post completion of 15 years also in NPS. So either 15 years or 60 years or date of retirement, whichever comes early. But I can ensure my financial freedom early as well if I am committed to it. Because option is in my hand, whether I'm using that option or not, it's up to me. But yes, option is available. And at the time of mature exit also, that we have seen up to 80% you can withdraw. 20% will go for the pension. And if the money is less than 8 lakh rupees, you can withdraw the full money tax free. And I personally feel the best part is this is a product which I can continue even after retirement, even when I stop earning. Because NPS gives you flexibility to continue the NPS account till the age of 85. So suppose I have 1 CR today. I have 1 CR today in my hand. I want to continue my NPS account for next 10 years or 15 years. And my money is going by 12% every month. So every year, 12% every year. So my 1 CR will become 2 CR in next 6 years. 2 CR will become 6 CR. 2 CR will become 4 CR in 12 years and 18 years. That 4 CR will become 8 CR and the entire money will be tax free. That is the power of this product. In case of any unforeseen event of death, we always declare a nominee. The nominee can take entire fund, that too without any tax implication. Process is pretty simple. We are always there to support subscribers or nominee in case of those emergencies. So a lot of flexibility in terms of investment, a lot of flexibility in terms of withdrawal. Good product to have the financial freedom at a particular age. And the best part is once you have the financial freedom, it means that you can continue the same kind of lifestyle which you have today. So if you want to have the same lifestyle, you want to have a financial freedom, I will suggest NPS should be a must-have product for you. So with this, thanks a lot for listening to me. And with this, I end this presentation. So my request to all of you is invest in NPS, enjoy financial freedom, and do not compromise on your lifestyle. It is in your hand. You have to commit yourself and you can make it happen. So I request in Q&A section, you can post your queries. We can take it one by one. And I request my colleague Harshit to support me to have a Q&A session. Harshit and Abhijit.
Yes, Harsh. So few of the questions that have been asked in the group. So Mr. Rohan Prashar have asked, can you throw
You
some
can
light on the
avoid the name. You can just
affiliate?
ask the query. Yeah.
Yeah, you can you just, we have a few series of questions. So first
Please.
question is, please throw some light on NPS 3.0 as the minimum investment years, withdrawal condition, and possibility to convert into SWP.
Yes, so NPS 3.0 is more about withdrawal conditions, which has been changed, which I discussed with you. No lock-in period for premature exit. At the time of mature exit, you can withdraw up to 80%, and you have the option to close NPS account once you complete 15 years match with maturity. So those were the major changes in 3.0. Plus, we discussed about MSF, like Dream, My Family, My Future. Those were the products launched recently. And if we talk about systematic withdrawal, yes, whatever money we can withdraw from NPS, like up to 80%, that money, rather than withdrawing in one go, I have an option. Either the money can come to my bank account in one go, or I can systematically withdraw from my NPS month on month. So if I have 50 lakh rupees in my NPS account, I can keep the money then and there, and that money can be withdrawn every month, maybe 10,000 rupees per month, that I can decide. So we call it systematic withdrawal of the lump sum money up to the age of 85. Yeah, Arshit, we can move on next
Yeah,
question.
thank you. Next question from the same individual is that in case a subscriber switches to an organization which does not provide the option of corporate NPS, how does the current corporate NPS account get impacted, and can they still be able to contribute into that account?
So this is a very interesting question, I think, which I always tell to my subscriber. The best part is NPS is your account. You have full control in NPS. You are only allowing your corporate to contribute on your behalf. But as an individual, you can manage your NPS account at any point of time. If there's no corporate contribution, you can manage NPS account in your individual capacity, and you can start a SIP. It's a pretty simple, and everything, every control is in your hand.
Okay. So the third question is, in case the employer shifts to an on-site locations abroad, can he or she still contribute to his NPS account, or the contribution will get impacted based on the local rules and regulations?
So see, you can continue NPS account as per your status of NRI and OCW. Once you move to any overseas location, your status may change after some point of time. As an NRI, as a OCW, it is allowed to use NPS. You can manage, you can continue, you can contribute, but the contribution by employer and the tax implication will be decided by the land of the law where you are moving. So maybe it's a complex question, but that you can take it forward with your employer. But yes, you can manage an NPS account and you can invest in that also.
Regarding choice option, can we opt for the different asset class if we have contribution less than 1 year, or how will be the switching being done into my NPS account?
So see, asset classes, you can change or you can update 4 times in a financial year. So suppose today I have chosen active choice. My percentage is 70% in equity. Tomorrow I want to reduce the equity percentage. I can do that. I can make it 50 also. Plus, if I want to move from auto to active, I can do so that also. The choice is into your hand. You can do it 4 times in a financial year only in case of active and auto choice. In case you are choosing MSF, multiple scheme frameworks, then it is not allowed. In auto active choice, it is allowed 4 times in a financial year.
Next up, if I withdraw the full amount to meet my emergency needs, may I start to contribute again after some time, or will the account get closed?
Can you repeat the question again, Archit?
Basically, if the subscriber has made an exit or withdraw all the amount in case of any emergency, what will happen to his NPS account? Will they still be able to contribute in coming future, or the account will get closed?
So if you have closed your NPS account, then account will be closed. And if you want to continue, you can open a new NPS account. That facility is available. Once you close one NPS account, you can open another NPS account. And in today's era, you can have multiple NPS account also. Like ICICI Pension Funds work with all the 3 CRA. We are working with Protein, which was known as NSDL previously. We are working with CAMS. We are also working with K Fintech. If you want, we can support you to open NPS account with all the 3 CRAs.
So Harsh, one of the subscriber has asked, why should I invest in NPS when I can invest in mutual funds where I can get better returns? Few of the participants have asked follow-up questions on it, like what are the tax benefits that we get on NPS other mutual funds? And parallelly, can you throw some light on tier 1 and tier 2?
So see, mutual funds and NPS, both products are good. They have their different purposes in our life. Mutual fund, we are investing to create some kind of wealth which may help us for our long term or maybe short term goals, because liquidity is there. I can withdraw the money also, maybe for the purchase of house, maybe purchase of car, maybe purchase for education of my kids, or maybe for some vacation and all. I can easily withdraw from mutual fund. So the purpose of mutual fund is different, and the purpose of NPS is completely different. Mutual fund, you are investing money not only for you, but maybe for your whole family. In NPS, you are investing money to get a financial freedom and to continue the same lifestyle once you stop earning. So both are having different purposes. Plus, if we talk about comparison of this product, I always feel that NPS is must cheaper it is much cheaper as compared to mutual fund, because NPS the cost is only 30 paisa, 0.30% of your AUM per annum, while in case of mutual fund, the cost is in the range of 1% to 2.5%. At a one third, one fifth cost, you can manage your NPS. Second is mutual fund, we always are subject to long-term, short-term capital gain taxes. So whenever we close the mutual fund, withdraw the money, we have to pay taxes. But NPS returns can be completely tax-free. Up to 60% you can withdraw tax-free, right? So that is another advantage. And in mutual fund, we do not have flexibility in terms of withdrawal, in terms of managing our investment. NPS offers you that flexibility also. So cost, flexibility, purpose are completely different. Plus, NPS is a pretty simple product being regulated by PFRDA, and government is making all the rules and regulation. So you can trust and you can have a lot of trust and have a lot of security in this product. Tier 1, tier 2, one more question was coming like tier 1 and tier 2. So I just explain you again. Tier 1 is the account where we are investing money for being financial freedom at one point of time. The government is giving a lot of tax benefit into it. And that money we can use post retirement or maybe once we stop earning. There's a tier 1 account. We call it retirement account. Tier 2 is an NPS account. Again, under NPS, you have an option to open tier 1 and tier 2. In tier 2 account, you can invest money anytime. You can withdraw money anytime. All the benefit of NPS will be available except tax benefit. So tier 2, there's no tax benefit, but you have a lot of flexibility to withdraw money whenever you want, and you can enjoy the low cost structure. You can enjoy the flexibilities available in NPS. That too at a cost of 30 paisa. So you can say tier 2 could be like low cost mutual fund account kind of thing, which we can say. Yeah, Ashit, any other question do we have?
Questions? So after the age of 60, is there any requirement to further invest into the NPS account or the yearly contribution to get an approximate return of say 12% interest for next 10 years? Do I need to further invest, or can I exit or start my pension? How the process would be after 60?
See, NPS exit process is completely online. It will take hardly 5 to 10 minutes. You can just log in your NPS account and you can initiate your exit from NPS. But the question is how much pension will be there, how much money I will get. To have that clarity, I suggested you can visit ICICI Pension website. We have a very good calculator which can gives you complete information on the kind of money you will have depending upon the money you are investing and how much pension you can get. The process is very simple. It's a complete online process. Anybody can do it who knows how to run WhatsApp. If you know how to run WhatsApp, you can do the NPS exit also. Process is simple, but yes, I will suggest you to visit ICICI Pension Fund, and we have a very good calculator for the purpose of finding out how much money or how much pension I will get.
So next up we have the subscriber is investing through corporate account. Can he further invest using SIP or lump sum contribution?
Yes, so I will. So it's a very good question because our employer might be contributing, but whether that money is sufficient or not, it's a big question, because I always feel like I am also having a subscriber of corporate NPS and my employer is contributing a money. But when I calculated that whether that fund will be sufficient for me post retirement after 60 or not, I feel that I need some more cushion. So I personally haven't like started my SIP, where a part of my income I investing in NPS. So similar way, every individual can think of how much money they want at the time of retirement, and they should start their SIP. They can start with 1,000, 2,000, 5,000, whatever the money is there. But a cushion and a security should always be there. So yes, option is available, lump sum also, SIP also.
Okay. So a subscriber who has been investing in his Tier 1 NPS account, uh, how would he or she would be able to identify whether the amount is called eligible for the partial withdrawal or the full withdrawal within the 4 years of account opening?
So see, within 4 years of account opening, if you want to know how much fund is there, you have to just visit the CRA website. You have to log in the NPS account using your NPS account number. That is a PRAN number, permanent retirement account number. Using that PRAN number, you can log in, you can reset your password, and you can check in the statement what is the self contribution or employee contribution. And you can see 25% of that money you can withdraw in case of emergencies. And if you want to completely close your NPS account, you can do so at any point of time. If the amount is less than 5 lakh rupees, you can withdraw the full amount. If it is more than 5 lakh rupees, you can withdraw up to 20%. Some rules will be there, but option is available in the hand of subscriber, and you can check your statement for the money.
Sure. So next up, Harsh. So a subscriber who has reached the age of 60, do they need to further contribute after the age of 60 if they still want to get the return or get returns from their NPS account and don't want to exit? Do they need to further contribute, or they can still keep it dormant or get returns from their NPS account? How would it be?
So if you want to continue NPS account, maybe at any point of time, if you do not want to invest any money in NPS, it is fine, fair, you can do so. But just to keep your NPS account active, you have to make one single transaction in one financial year. There is no limit in terms of monetary amount, but a single transaction every financial year should be there in NPS account to keep it active. Otherwise, it will be tagged as dormant. So I suggest
And
one transaction per year of any amount.
would there be any penalty if I'm not contributing? What would that be?
No, there is no penalty in NPS. Nothing. No penalty as such. So
Okay.
this money
So
is for retirement. Government is asking you to save money for retirement. The government is giving you a lot of incentive in terms of tax benefit. They will not penalize you, please.
thank you, Harsh. So the next question the subscriber wants to ask, a subscriber wants to make a lump sum contribution of 1 CR. Would it be eligible? And was that if they don't want to further contribute, how would the returns they will be getting through NPS?
So you can do a lump sum contribution also. The returns will be like as per the your allocation toward equity, government securities and corporate bond. Returns will be like good only. So you can do so like a lump sum also. You can invest money in NPS and you can continue the NPS account. It is not necessary that every month you have to contribute.
So that was it in the questions that were asked. In case anyone else have any questions, they can write them in the Q&A part. Few of the individuals who might not be able to add into the Q&A, you can share the questions to us. They'll be able to help you out. Search, few of the individuals have reported that they are not able to add questions in the Q&A tab. So moving ahead, we can open the chat box for these set of questions.
Yeah, so I request the participant if they have any question, you can put question in Q&A so that we can answer the questions. Any other question is available, Harshit, in chat box or
No,
somewhere?
Harsh, not yet in chat box.
So I think
So
somebody is
this
raising
time,
hand. So I request you to please, Murli, please put your question in chat box, please, in Q&A, please.
Actually, he has asked the question. His question is
Yep.
uh, two questions he had asked. Can
Hmm.
someone one having a tier 1 account open a tier 2 account? And second is how does this new product Dream works?
Okay, so see, tier 1, whenever you open an NPS account, tier 1 is a mandatory account. You have to open tier 1 account. Tier 2 is a voluntary account. If you want to use the benefit of tier 1, you can use the benefit of tier 1. You can open the you can use the benefit of tier 2 and you can open the tier 2 account. Tier 2 is a voluntary account and tier 1 is a mandatory account. And how you can use the benefit of dreams. So see, you have to just select the dream option while you are opening NPS account. And how it works is, in dream we have a option, we have equity exposure up to 100%. So the range is from 50% to 100%. My fund manager can invest in equity and rest of the money will be invested toward government securities and corporate bond. So depending upon the market condition, if my fund manager will see next 1 year is very good for equity, they can increase the equity exposure on a higher side, maybe 90, 95 or 100. If they will foresee the next coming years are not good for equity, maybe the coming years are good for maybe corporate bond or government securities. So they will reduce the equity exposure up to 50 and rest of the money will be invested in government security and corporate bond. The idea is when market will fluctuate like this, at every fluctuation, our subscriber should get the maximum benefit. If it is going up, we should try to get maximum benefit. If it is going down, we should minimize our losses. So that is where this product will help you to maximize the potential of getting more returns when market is going up, minimizing the risk when market is going down.
So Harsh, another questions that I have received in our chat box. So one of the subscriber, she is already subscribing into his NPS account. Now she wants to open NPS for her for his domestic help. So how would the contribution process be? Can they open for the third party, and how the process would be if they want to start investment with a small corpus or with a relatively small amount?
So I still remember a case. So one of the MD of one of the big financial institution in India. So he called me and he was asking the same question. Harsh, I have two domestic support at my home and I want to open an NPS account for them because they do not have any other earning. And if I will contribute amount, that may help them maybe in long-term future. So what you can do now, you can just ask their Aadhaar number. You can support them to open the NPS account because NPS account opening journey is pretty simple. We only require the Aadhaar number. Using the Aadhaar number, you can open the NPS account for them in their individual capacity. Once the NPS account will be opened, so what you can do every month, whenever you are paying salary to them, that point of time, every month you can just invest a small amount of money in the NPS account. And you can also encourage if they have any saving, they can also invest in the money. But you have to help them because the transaction will be digital. Account opening process is digital. So that particular help will be required. Otherwise, it is pretty possible.
So another question that is being asked, how and what would be the, first of all, what would be the process of partial withdrawal? And in case of emergency, how from the NPS account?
So partial withdrawal, again you have to log in your NPS account on CRA website. There's an option called withdrawal. When you will click on the withdrawal, you will see the option, different option. We have an option of partial withdrawal also. So there are different tabs. In the tab, we have different option. So one option is partial withdrawal. You have to click on that partial withdrawal option. You can see the total fund value also. You can see the money which you can get through partial withdrawal, means 25% of the self contribution. You can see the amount and all. System will ask you the purpose of withdrawal. The purpose of withdrawal could be like medical emergencies, maybe marriage, maybe house construction, or maybe some other emergencies. You will just declare. It's based on the self declaration. You have to submit it, and you can get that amount within your bank account within 20, maybe you can say within 3 to 4 days. The money will come to your bank account. The process is completely online. You have to just fill the online form. Any assistant is required, maybe you can just touch base your service provider. They can also assist you.
Subsequent question to this is, how would be the partial withdrawal taxed? Would there be any tax liability for me?
The partial withdrawals are tax free. There is no tax liability on that.
Yeah. I believe that was it in terms of the questions that are asked in the chat box and Q&A.
Yep. Thanks, Arshit. Thanks for assisting.
One more question.
Vijay.
Like someone asked, please explain 8060D1, 8060D1B, and 8060D2, all the three tax benefits.
So my request would be you please join us in our next events, which we will do like every alternate Saturdays, maybe first and third. And maybe in brief, we will cover the, in detail, we will cover that topic also taxation ka. But just to answer your question, see, 80C is a normal tax rebate people are getting in old tax regime. The limit is 1.5 lakh rupees, where we are taking exemption of PF. And if you're investing anything in insurance, plus NPS can also be the part of it. If you're investing in your individual capacity, you can use the benefit under 80C limit of 1.5 lakh. Then we have 80CCD 1B, 80CCD 2. These two are the exclusive tax rebates available for NPS subscriber. One is for the corporate contribution and one is for individual contribution. But if you are part of new tax regime, then only corporate contribution will be eligible for tax benefit at the time of contribution. And the limit is up to 14% of your basic. Old tax regime, the limit is 10% of your basic. So in coming series, maybe we will discuss in detail. So Abhijit, we can just note it down because it's detailed chapter. We can cover in our subsequent events.
Yes, yes. One more question, Hers.
Yep.
In a NPS tier 1 account where the employer has been contributing on behalf of the employee, is the employee eligible to make partial withdrawal after 5 years from the account opening date? If so, what are the eligibility criteria and withdrawal limits?
See, again, I am telling you the partial withdrawal facility is available, but it is only applicable for self contribution. If money is coming through your employer, if employer is contributing any amount of money in your NPS account, that will be written in your statement as an employer contribution. And whatever you personally have invested, that will be coming as an employee contribution. 25% of employee contribution you can withdraw. You cannot withdraw employer contribution in terms of partial withdrawal. And again, for partial withdrawal, you have to just wait for 3 years. Post 3 years, you can do it, but not from the employer contribution, but only from the self contribution. So again, it won't be eligible for partial withdrawal. But yes, premature exit will be applicable. If you want to do premature exit, you can do so. You can withdraw the money. You can close the NPS account. You can withdraw the money. So that option and facility will be available.
And the contribution made from the corporate on behalf of employee is considered as the self contribution?
No.
Question.
Contribution made by corporate on the behalf of employee will be considered as employer contribution, not as a self contribution. So yeah, Abhijit, I think we are on time, 1:28,
Yes, yes.
and we were supposed to close this call at 1:30. So we can wait for 1 or 2 more minutes if they have any query, and then we can close the call. And thank you everyone for joining us today. And we look forward to have your participation in the coming events also. Maybe some broader topic, some finer topics we will cover on NPS. So your participation will also encourage us to have more and more such kind of series that can support you to understand more about NPS, and you can use this product for your benefits to be the financial independent at one point of life, one point of time, plus continue the same lifestyle which you have today. And I wish you all the best for your financial freedom prospects. So we always will be there for you. ICICI Pension Fund will always be there for you. You can reach out to any one of us through different mediums. Our website is there. Our WhatsApp support is there. Our chatbot is there. Our email IDs are there. So you can visit our website and you can, avail any kind of benefit, any kind of knowledge if you want to avail. And thank you everyone again. Yeah, Abhijit, I think we can conclude the call. Thank you everyone. Thank you very much.
Yes.